The entire crypto market has been on edge lately, and finally we're starting to see it stabilize. Bitcoin's price is starting to stabilize around that $36,000 per coin range. Ethereum's price is starting to stabilize around $2,400 per coin range. And this is important because a lot of Bitcoin bulls, a lot of analysts were predicting a pretty bloody weekend for crypto during this Memorial Day weekend in the US, the long holiday weekend. And we did see a bit of a scare at the beginning of the weekend, not to say, because we did see Bitcoin's price drop about 10% in a day. We saw Ethereum's price drop, but today we're finally seeing things starting to come back a bit. The entire crypto market is up about 8.55%. That's good news. But there are a couple things to keep in mind moving into this week that are going to have big impacts on crypto moving forward, and I want to make sure you are knowing a couple things to keep an eye on. So we're first going to go over some things going on between Wall Street and regulators, which could have big impacts on the entire crypto market, not just some of the major cryptos, but on altcoins, Bitcoin, Ethereum, everything. This is long-term impacts, things to keep in mind. Second thing I want to go over is what is going on with some major retailers, and they're integrating crypto like Bitcoin, Dogecoin, Ethereum, Litecoin, and other major cryptos as well, because we're finally starting to see some more broad adoption of crypto payments, not just for tech firms, but some just general brick and mortar retailers that have hundreds of locations across the US. That's a big deal. And finally, at the end of the video, we're going to go over what is going on with three specific altcoins that are, smaller altcoins that have 10, 20x potential for this year. And we had some major news come out with all three of them that you are definitely going to want to hear, because it is something that I'm really excited about. Want to share this information with you guys. And because of this news that came out, I'm actually buying all three of these more and more as we're seeing these dips over the last couple of days. So make sure to stick around till the end for that. I'm going to put timestamps down below so you can skip ahead to any portion of the video. But if you're new here, make sure to like the video down below, subscribe to the channel. The whole reason why I created this channel was that YouTube had deleted all of my YouTube channels with about 300,000 subscribers. So I made this channel for the sole reason that I wanted to prove that the underdog, the little guy, can succeed. If you're, knocked back down to zero, if you lose your job, you lose your investments, you can always come back. The only way that you will fail is if you give up, you don't keep trying. So fortunately, we did get those other channels back, but that's the reason why we created this channel. Anyways, right now, many analysts were predicting a pretty bloody crypto Memorial Day weekend, long weekend for the holiday in the US. Analysts were not too excited about this for crypto. And we did see a bit of a scare on Saturday and on late Friday night. We saw the entire crypto market drop pretty significantly. Bitcoin dropped down to about $33,000 per coin, but fortunately, we're seeing everything bounce back. We're up about 8.55% in the last 24 hours. Bitcoin's price is up 6%. Ethereum's price is up about 10%. Cardano's up over 20%, and things are looking pretty good. Cardano is driving and leading the way for this recovery because a couple of big announcements, but things are looking pretty good. Bitcoin's price is stabilizing. Ethereum's price is stabilizing, and we haven't seen Bitcoin drop below $30,000 per coin, which is very important in my mind because that is a key level that we really want to stay above, that $30,000 per coin range. But anyways, right now, in terms of what is going on, there are a couple of things you need to keep in mind out over the next, couple of days, next couple of weeks, which are going to have big impacts on crypto. And the first is Wall Street and Washington, D.C. Lawmakers in Washington, D.C. are having a bit of a disconnect on what to do with crypto moving forward. A lot of Wall Street firms and major financial industry players like Fidelity, Skybridge Capital, and other companies are pushing to approve their plans to launch funds and ETFs in the stock market that would help smaller investors, help some institutions invest into Bitcoin, Ethereum, and things like that, which would lead to an increase in prices for sure for Bitcoin and Ethereum. Right now, there are close to a dozen different Bitcoin and Ethereum ETFs that are waiting to be approved by the SEC, but just have not yet been approved. And once these are approved, which should happen within the next couple of months, in my opinion, this should have a really positive impact on Ethereum, on Bitcoin, and the entire crypto market in general. Because we know if Bitcoin is looking bullish, if Ethereum is looking bullish, well then the entire crypto market, including altcoins, are going to be performing pretty well. And what's going on right now is with the recent volatility we're seeing with Bitcoin, like we saw that drop of about 10% over the weekend, as people were worried about Memorial Day week, with the extended Memorial Day weekend. With that drop off, that is one of the reasons why regulators are worried. Regulators are worried for a couple of reasons. First of all, Bitcoin is not the most energy efficient. Also with Bitcoin, another thing regulators are worried about is the volatility, some fraudulent activity such as money laundering or tax evasion, things like that go on in the crypto world. And that is one thing that regulators are worried about. But on the other hand, there is a huge demand for Bitcoin and Ethereum ETFs. We're seeing a lot of firms, submit applications to the SEC to get these ETFs approved because investors want to get invested in it. And we all know, like according to Cathie Wood, who is the CEO of ARK Invest, once we start to see these Bitcoin and Ethereum ETFs get approved, that's when we're going to start to see institutions allocate single digits of their balance sheet, so the cash they have on their balance sheet, they're going to start to allocate that into Bitcoin, Ethereum, and other cryptocurrencies in general. And once we see that happen, that's what's really going to push the price of Bitcoin up to about $500,000 per coin, according to ARK Invest's CEO, Cathie Wood. So really, what's holding back right now the big money from getting into crypto to really going all in on crypto is going to be these Bitcoin and Ethereum ETFs. And there were a lot of different House committees that took place, a couple different hearings that took place within the last couple of days that, they're still debating it. It's still nothing's for sure yet, but we know eventually they are going to approve these Bitcoin and Ethereum ETFs. It's just right now regulators are still on the fence, and every time we see Bitcoin's price drop 10% in a day, well, it adds a little bit of concern to these regulators. But either way, I think this is something to just keep an eye on, keep in the back of your mind, stay up to date on what's going on with these ETFs, the Bitcoin ETFs, the Ethereum ETFs, and keep an eye on what is happening on them, because once we see these approved, I think that's where we're going to see just regular companies, regular Fortune 500 companies start to actually get into crypto. Because right now, a lot of companies that are invested in crypto are the more innovative, the more tech firms. Like we're seeing Square, Twitter, we're seeing Tesla. More innovative companies are doing this, but some of the, just established companies, let's say for example, Coca-Cola, they're not invested in Bitcoin. But once we start to see more wide-scale adoption of crypto, that's when we're really going to start to see Bitcoin's price continue to take off, because once we see these ETFs approved, it makes it so much easier for these institutions to get into Bitcoin, Ethereum, and allocate a lot of cash on their balance sheet into that. So just keep an eye on what is going on with these ETFs. There are continue to be more and more hearings this week. Nothing major, but just something to keep in mind moving forward. Next up is with companies starting to accept Bitcoin, Dogecoin, Litecoin, and other cryptos as a form of payment. We saw a US convenience store chain called Sheets say that they are officially accepting cryptocurrencies for payments. And this is a really big deal. On May 27th, Sheets revealed that the company will be accepting crypto payments via the digital payments network Flexa. And this company, Sheets, is headquartered in Pennsylvania. They have about 622 convenience stores and coffee shops in Ohio, Virginia, North Carolina, Pennsylvania, West Virginia, and Maryland. And this is a big deal because it is one of the first just convenience store chains to allow and accept for crypto. They're accepting Bitcoin, they're accepting Dogecoin, they're accepting Ethereum, Litecoin, and many more. And this is important because we're starting to finally see not just the tech firms, but let's say Tesla, but we're starting to see just regular convenience stores, regular brick and mortar retailers start to see the value in accepting crypto. And while many people might not use, Bitcoin to buy gas, or use Bitcoin to buy a candy bar in a gas station, it's important because now we're starting to see that there's enough demand out there and there's enough talk out there that companies that are just, gas stations, convenience stores, they're seeing the value in actually adding this. And that is a big step. That's a big step for crypto, because it's not just like, a small portion of the population who are really innovative, want to get, be in tech industry. It's not just those people, those companies. It's just regular everyday companies that are brick and mortar retailers. Like Sheetz doesn't have, they don't have an online presence. They are strictly a brick and mortar retailer, and they are accepting crypto. So this is important. They're saying why they're doing this is they aim to provide customers with the ability to pay for items inside the store, fill up their cars, trucks, RVs, at the gas pump using Bitcoin, using crypto. And this is a big step in the right direction. In addition to this, one thing going on with crypto right now is that many regulators, like we spoke about before, are concerned about energy consumption with Bitcoin. And we had some great news come out the other day, something that people have not been talking about so much, and that is that Easy Blockchain, a company called Easy Blockchain, partnered with Texas-based oil provider called Silver Energy to monetize wasted natural gas with Bitcoin mining. And this is a really big deal because natural gas is a byproduct of oil extraction, and oil providers either do one of two things. They either flare the gas, which is basically burning the natural gas, or they use it in some other way. They try and sell it and capture it. But really the reality is natural gas is not as profitable as oil, so a lot of times they just burn it, they forget about it, they try and get rid of it. And right now, by this process called natural gas flaring, what happens is the World Bank estimates that 5.3 trillion cubic feet of natural gas is flared annually into the atmosphere, which contributes to about 1% of man-made carbon dioxide emissions every single year. And this is a big deal because right now we're seeing the problem with Bitcoin. Right now, regulators are concerned about energy consumption. Bitcoin's not great for the environment. We're seeing that this problem with natural gas and oil producers, which has always been around. Whenever you produce oil, you're always going to have this extra natural gas that comes as a result of it from drilling deep down into the earth. And that's just something that happens. So right now you have that problem with natural gas that regulators are not happy about. You have the problem with Bitcoin where regulators are not happy how much energy consumes. And by combining these two, you solve both the problems. You find a more efficient way to mine Bitcoin because you're using energy that would have been, you're using the natural gas that would have contributed more to carbon dioxide emissions. Instead of doing that, instead of burning it, now it's used to mine Bitcoin, and that's a big deal. So the company Easy Blockchain, they partnered with Texas-based oil and gas service provider Silver Energy, and what they did is they installed a Bitcoin mining site at Silver Energy's Alberta, Canada location in February 2021. They're already producing about 1 megawatt of power consumption to mine for Bitcoin, and this is a big deal moving forward. Bitcoin mining's enormous power consumption can solve the environmental problems with gas flaring, leaking wells, and a lot of problems that the oil and gas industry have with environmentalists. So something to keep in mind moving forward. This is a good sign. I think it's a great solution. You have the problem with oil producers having to flare natural gas. You have the problem with Bitcoin consuming too much energy. Well, either way, if you're getting oil, it's going to have that problem with natural gas having to either be burned, contribute more carbon emissions, CO2 emissions into the atmosphere. You're going to have that problem. So it's just a perfect solution to that problem. And finally, let's get into what's going on with 3 different coins. So right now, 3 coins I'm pretty excited about, which had major announcements recently, is first Cardano. Cardano recently had a major announcement from IOHK. And the major announcement was that they're finally starting to roll out the testnet version of their smart contracts, which is a huge deal. Cardano right now is number 2 in terms of decentralized finance. Cryptos right behind Ethereum. And one of the main differences between Cardano and Ethereum right now is that Cardano doesn't have these smart contracts. And that's a big deal. That's what many people use Ethereum because of smart contract applications, things that they could do with them. And now with this announcement with Cardano, it really puts it on the exact same playing field as Ethereum in terms of use cases, what it could do. And what I like about Cardano specifically is right now, First of all, Cardano is number 4 in terms of market cap. They're behind Bitcoin, Ethereum, and Tether. So really, in my mind, number 3. But right now, with Cardano being, having smart contracts, this will mean that they are not only have the same use cases, smart contracts, NFTs, but also they are faster than Ethereum. It consumes less energy than Ethereum. And with this rollout now getting closer and closer for smart contracts, it shows that Cardano, in my opinion, could overtake Ethereum in terms of market cap. They have all the use cases. It is able to handle more transactions per second. It's more energy efficient, and many DeFi developers on Ethereum's network, they're running into problems with high gas fees. Cardano doesn't have that. So this was a big announcement with smart contracts getting closer and closer to being rolled out for the general public. We've done lots of videos on Cardano, so I'll make sure to link those down below, but that is a major announcement that I'm pretty excited about with Cardano. The second crypto I'm keeping an eye out for is Polygon. We've talked about this one a lot, and 3 reasons why I think Polygon could have another massive week. We saw it dip down to about 80 cents per coin, bounce back, went all the way back up above $2 per coin, and now it's sitting right around that dollar, right around that high $1 per coin range. Right now, Polygon, there's a lot of growing sentiment, a lot of hype around it. First of all, because people are realizing that Ethereum is here to stay. Ethereum, there's a lot of developers on the platform, but the one problem with Ethereum right now is that, think of it like a highway. There's only so many lanes on the highway, only so many applications that can be built on Ethereum, only so many transactions that can be processed on Ethereum before it gets congested. And that's what's happening right now. That highway that you think of like Ethereum is getting congested, causing gas fees to go through the roof. And one way to solve this is for Ethereum developers to go over to Polygon. Polygon, I've talked about this a lot. Think of Polygon just like an extension of Ethereum. If you are an Ethereum developer, you can also work on Polygon. Polygon is just like the side roads. Think of Ethereum like the highway. Polygon is like the side road. So it helps to relieve some of the pressure from people developing on Ethereum. There's going to be lower fees and still have all the benefits of Ethereum's network. Second thing going on is that right now, Google BigQuery, they had a major announcement within the last 48 hours that said we are, and Polygon's team said that we are extremely thrilled to share that we have completed an integration of Polygon datasets into Google Cloud Tech, #BigQuery. This means that you can query Polygon's datasets, run analytics, and extract insights using Google's BigQuery platform. Blockchains are some of the richest sources of verifiable data, and this is a big step towards improving developer access to Polygon's datasets and helping analysts unlock the immense latent value. This is a really big deal because it improves the accessibility and positioning of Polygon. It really establishes it as one of the major cryptos out there. And by no means is Polygon small. They are in the top 20 out of all cryptos. Currently, they're number 14 with about a $4.4 billion market cap. But having this integration with Google is a really big deal. And the third thing with Polygon that was just announced was with Mark Cuban. We did an entire video on this, but Mark Cuban officially revealed that he is investing in Polygon and into their project because he believes in it long term. He said it's finally listed on his Mark Cuban company's website, and he said that having more TPS and lower gas fees is not enough. There must be a current network effect and significant user growth. This is the challenge of most L1s and L2s because, with few exceptions, marketing in the crypto universe is beyond awful. It is fast, it works well, and most importantly, their user base is growing exponentially. Right now, we're seeing Polygon has actually overtaken Ethereum in terms of transactions per day, which is a really big deal because people are just realizing the benefit of Polygon if they're an Ethereum developer. So those are a couple big announcements with Polygon. And the third crypto to keep an eye out on is EOS. For those of you who don't know, we haven't spoken about EOS too much on this channel, but EOS has marketed itself as Ethereum for big businesses. It is a competitor to Ethereum in the sense that it is a direct competitor to Ethereum. It is a decentralized finance application. It supports both decentralized finance apps. It supports smart contracts just like Ethereum. However, a couple of things that separate EOS from Ethereum is in terms of execution and transaction speed. Currently, EOS is among the top 20 in terms of all cryptos. Currently, it has a market cap of right around $3 billion market cap. Right now, the price is around $6.15 per coin, ranked 23. And what's going on is that EOS currently is better than Ethereum in a couple of different ways. The first thing is that it supports between 10,000 and 100,000 transactions per second, which is not going to be as important once ETH 2.0 is rolled out, but right now it is important because it helps with the scalability and efficiency right now. In addition to this, it also supports proof of stake, which Ethereum right now does not. Ethereum will have that with ETH 2.0. Other thing to keep in mind is that as we're seeing gas fees continue to rise for Ethereum, people who developed DeFi applications on Ethereum are getting less and less, are looking for alternatives. They're getting less excited about using Ethereum because of these high gas fees, and EOS has many of the same use cases, is able to do many of the same things as Ethereum, and that is why many people are starting to look towards EOS for building these decentralized finance apps, building these smart contracts and things like that. So just a couple things to keep in mind moving forward. Those three coins with Cardano, Polygon, EOS, and also what is going on in the crypto world with Bitcoin, Ethereum ETFs, a couple of companies starting to accept crypto, starting to get more wide-scale adoption, and that's a couple things just to keep in mind moving forward into the next week or so. So, hope you guys enjoyed today's video, a bit of a longer one. Let me know what you guys thought of this, and I hope you enjoyed today's video, and I'll see you in the next episode.